Hi guys, welcome to my channel. I'm Felix, and today we're going to be talking about Learning Unit 7. So if you are new here, remember to like and subscribe, drop a comment, and I would advise you that by now, as you're doing Learning Unit 7, you would have followed the series from Learning Unit 1, Learning Unit 2, all the way to Learning Unit 7. And guys, also do remember I am a financial accounting tutor. I've been tutoring this module since 2019, I think. And I can give you this session at one take, but it doesn't necessarily mean that you're going to understand it at one take. So also give yourself time to also go through again what I'll be saying here, pause the video, and also confirm with your learning unit or your study guide. The learning unit that I'm going to be using is the learning unit from UNISA. It's available in Telegram groups for 2022. The learning unit for 2022. So you can find it on Telegram. And for the reasons of copyrights, I cannot then publish a part of the learning unit that I'm going to be following from. But you can just follow from what I'll be saying on your learning units. So learning unit 7 talks about section 86.3 and section 86.4. It also goes and talks about the rules regarding accountants and their appointments. So because of the nature of your exam, you now have to at least know these things in detail. The nature of your assessment demands that you know the theory in a bit more detail, right? So section 86.1 of the Legal Practitioners Act of 2014 states that trust monies do not form part of assets of the practitioner. This thus the creditors of the legal practice cannot claim against this money. Basically what they're trying to say is if the firm gets into debts, the firm cannot, or the creditors of the firm cannot then go after the money which has been entrusted as a form of compensation for themselves. So that money belongs to that money belongs to the person who's entrusted you with. You can't put it out as payment or surety for anything. So they go on a quick note there. Section 86, every legal practitioner referred to in section 84.1 must operate a trust account. Section 86.2, every thingy must operate 1, 2, 3 thing is theory. Go through this theory because you are going to be asked, and it will be an ABC question, and the answers are going to be horribly similar. I would use the word horribly similar because it is as good as someone requiring you to differentiate between yellow and gold. So for you to be able to be in a position of doing so, make sure that you do your theory and you get the theory right. I can't reread this thing for you because it's right in front of you. So it's theory that you just have to go through and make sure that you understand so that you won't have any problems whatsoever. So they go on to talk about Rule 55.1, Rule 55.2, Rule 55.4. Again, straight up theory. So when the thing gets a bit confusing is when they now start talking about the 84s. So they have 84.3, right, and 84.2, right, which you must be a bit wary of. Is 88, there's 84.3, there's 84.2, 84.1. Theory again, go through it. The tricky ones is when it comes to investments. So with investments, I have a separate video for you where I talk about these sections. Section 86.3 of the LPA and section 86.4 of the LPA. I went in depth with those sections, and I recommend you go to those videos so that at least you do yourself a favor or you do yourself a justice there. So that's when it gets a bit trickier, when it gets to 86.3 and 86.4. So as you'll be going through the questions, you will have to understand or ask yourself the question, especially when it comes to investments, as in, who is giving the instruction to invest? Is it the client, or is it going to be the firm deciding to invest? That's where the trick lies. If you can easily pick from your question, okay, this was initiated by the firm, or this was initiated by the client, it's going to direct you exactly to where or which one you have to use. Because remember, 5% of the profit that you're going to make is going to go to the LPF fund. The other one, 100% of the, I'm calling it profit, but it's actually interest. The interest that you're going to make has to go to the Fidelity fund. So I can't go through the other rules with you, because it's theory, basic theory, because they're going to ask, okay, they might ask part of the rule, they might ask the section. You just have to know what is going on there, right? You must know which one are you going to apply. Are you going to apply the 95? Are you going to apply the 95%? Is it going to be 95 to the client, 5% to the LFP, Legal Practitioners Fund, or is it going to be 100% to the LFP and 0% to the client? That is when the firm decides on its own, right? But when the decision is made simply because there's going to be an excess of funds which are in the possession of the attorney. So the attorney is now making decisions with the funds available, that okay, instead of leaving these funds just hanging or just lying there, let us rather make investments of these funds, right? Let us just make investments of these funds. So 7.4 has a schematic presentation that you just have, that I'll go with you, that I just want you to master and make sure that you understand, right? So the schematic presentation goes by saying the client deposits money into the practice trust bank account, right? Every trust legal practitioner of his own accord decides to invest the money currently not required for a specific purpose in the LPFF approved bank until it's needed for fees and costs, right? So the legal practitioner on the first leg of your schematic presentation is the one who's making the decision. So the money is then paid into the trust investment account, either a savings or an interest bearing. So the moment it's the client making the decision, you have to understand that that investment is going to be regarded as section 86.3, right? And the interest that is going to be earned there is going to be paid over annually. Remember, not monthly, but annually. It will be paid annually to the LPFF fund, right? On the other end, or on the far side of that schematic presentation, the client instructs the practitioner to invest the money in the LPFF approved bank until it's needed for fees and costs. So it's the client telling the firm, okay, I need you guys to invest on my behalf. When that happens, the money is then put into an interest bearing or a savings account. That is then regarded as your section 86.4 type of investment. The interest earned there is paid over monthly to the client at 95% and 5% to the LPFF. So just make sure that you just get the writings correctly on who's giving the instruction, right? Who's giving the instruction. They go on to say every trust account practice must keep a trust account at a bank which the LPF entered into an arrangement with, so that it can be a section 86.2 investment. So that is your schematic presentation, which summarizes the crux of Learning Unit 7. And I also have another video where I'm hammering on the same concepts on learning unit 7 that you just have to understand for yourself. You just have to understand for yourself. They're going to talk about appointing an auditor. Appointing an auditor is also theory, but I would also advise that you look at it because it tends to be asked a lot regarding the report, when the report should be submitted, should it be audited, and all of that. So I would advise that you must also spend time reading. Again, it's straight theory that doesn't need any parallel explanation. Just go through it, go through the theory that they have there in detail, and make sure that when they ask you the ABC questions, you've seen this before and you've familiarized yourself with it, because the current setup of the examination is a bit complicated for you to just rely on passing the last assessment. So try as much as you can to score as many marks as you can at during other assessments, so that by the time you get to the last assessments, it won't be complicated for you. But thank you so much for taking your time to listen to this video, and do like, subscribe, comment, and I'll see you on chapter 8. Thank you so much.